So today I wanted to talk about the different types of butterflies that there are and why we trade butterflies in zero DTE. Now, what most people know of it as an options trade, right? But butterfly is a term that's been used for quite some time in all kinds of derivatives. In fact, the butterfly trade was originally with futures. And it's a very flexible trade. It's not really that adjustable because it is what it is. However, its flexibility comes in the variety of ways that you can present it. And really a butterfly, all it really means is that you have long strikes flanking short strikes. Now, how many long strikes and short strikes do you have? That's where most people are maybe not as knowledgeable, but most look at a butterfly as something symmetrical, right? So like, for instance, we have a question right now. Travis is asking, Ernie, do you center your butterfly on the point of control or the largest volume node or both? Well, how about neither? How's that for an answer? So let me just say that the reason why I like the butterfly isn't so that I can align it with the market structure. Although that sounds like a cool idea. And at first I thought it was a really, really cool idea. So yeah, so it's neither, Travis. I'm not lining it up with volume profile, although I am using volume profile and the underlying market structure in how I manage the profits once in a butterfly. Its primary purpose is to manage your risk, to set up an environment where you can collect premium. So it's a premium collection device. And unlike a straddle or a strangle, you don't have undefined risk. You have defined risk by flanking it with long strikes. And with that, you can create a butterfly or a strategy that has fantastic risk to reward characteristics. And that is another tenet of trading, right? Not just zero DTE trading, but trading in general, or really it's a tenet in virtually any kind of performance related endeavor, whether it's financial or whatever, where you're trying to take the smallest possible risk for the largest possible return, right? So that's our number one intent, is to get that risk to reward. Now there's an optimal risk to reward depending on the size of your account and what you're trading and what's available, etc. But for most people, it's about 1 to 9. That's pretty much the standard. And if you go and talk to some of the old floor traders with butterflies, or even some of the more modern options traders on the floor, the exchanges, they'll all tell you it's 1 to 9. And that's actually something that I've come to find as well in my trading, because all of my trading, regardless of all the different risk to rewards that I took and all of these hundreds and hundreds of trades that I've done with zero DTE over the past couple of years, they have all averaged out to 8.8, which is basically 1 to 9, right? So 1 to 9 is like the sweet spot. That's where we start. We don't start with where's the volume profile. I start with, hey, can I put on a good risk to reward? Can I put on a trade where, and quite frankly, the market will tell you where to put those strikes based on whether it's a 1 to 9 risk to reward. Because if I choose a center strike to where to start my butterfly, and then once I start widening it, I can widen it to maybe 15 wide, then 20, 25, whatever. Maybe like I widen it to 25 and I look and the cost is $5. Well, $5 for a 20 wide or 25 wide spread is not 1 to 9. Nowhere close. What I really need it to be is at $2.50, because $2.50 minus 2,500 would give you 22.50, and 22.50 divided by 250, which is the risk, would give you 1 to 9, right? So anyways, you always want to get your risk, your debit, 1/10 the size of your max or the width of your fly. That'll give you the 1 to 9 and put you in an optimal position mathematically to give you the best combination of potential reward and the amount of risk that you want to take. You want to take these small risks for potentially large reward. And of course, you'll take any reward that's in between there, the plethora of or spectrum of rewards that are in between your max risk and your max profit. So that's one of the reasons why the butterfly is so cool, because you can define these things. The other is that you can collect the premium, and you can collect the premium on the day that you want to collect premium, the expiration day, where it's giving you that premium, that big punch of premium in a very short time frame. So that's why people are gravitating towards zero DTE, because now it's making day trading easier for a lot of people. The problem is that they're going about it all wrong. All wrong. Completely wrong. They're trying to make everything into a high probability trade. They don't like that 1 to 9 or that asymmetric. That's something that does not compute. They think they're going to go the other way, do a 10 to 1 or a 9 to 1 or 20 to 1 or whatever it is, and spread those wings way, way out. Don't forget that butterfly. It's not giving me enough. They want to put it around price as if it's a neutral trade, but there's nothing neutral about the market. The market's hardly ever neutral. Would you want to put on a neutral trade for tomorrow's market with a 72-point expected move? What kind of silliness is that? Now you might say, well, how am I going to put on a butterfly that has even less range? Well, you don't put it around price. You put it outside, out of the money, and you hope that price goes towards it. But what if it goes the other way? Well, then you put another one over there, forming what we call our classic Batman trade. So that's what you do. So that's the flexibility of the butterfly. The other thing that you can control is how wide you want to make it, and there's even more. It doesn't have to be symmetrical. It could be asymmetrical, just like asymmetrical risk to reward. You could change the closer spread and the further away spread to you when you're putting this trade on, make them different widths, and that will create what's called a broken wing butterfly. Basically, it looks like a butterfly and you chopped off its wing, I guess. Sounds silly to me, but that's what they call it. They call it a broken wing butterfly. There are other ways that you can do butterflies. Remember, I said a butterfly doesn't necessarily have to be this symmetrical thing. That's just, made up construct. That's what is most popular. And, in the futures world, we used to do butterflies all the time, but they were all kinds of different weights. And a lot of times we would do them with a kind of arbitrage in mind and do it with different futures contracts. We would make a butterfly that would consist of the Dow futures with the S&P futures, or the oil futures with the heating oil futures, or whatever. And we would create these elaborate butterflies, but with different weights on the wings and different weights on the shorts. And so that's really real power, I think, of current butterflies, even with options. We can change those. We can create what's called an unbalanced butterfly. Let's see, we got some more. I'm going to get to the comments in a second. So we can create an unbalanced butterfly as well. It doesn't have to be 1, 2, 1. It could be 1, 3, 2, or 2, 7, 4, or whatever combination that floats your boat. And so you would do that in order to create different risk structures and modeling your idea of where the market is showing strength or where it isn't showing strength.